If
We've
it's
got
important, we just, oh, go ahead, please.
Yeah, so we have Michael Miller here. He's a pretty sharp guy, knack for languages, and is a real estate investor. Michael, go ahead and introduce yourself.
Okay, hello everybody. I have been involved in real estate for the last 15 years. I started off selling building materials to contractors at a lumber yard, traditional lumber yard, just before the box stores were taking over. And so that got me started in real estate. Got my first punches to the face, proverbially, when the market crashed. I had started investing in real estate. I was too young to know better. I was 18, 19 years old when I bought my first investment property. I didn't understand how the financial markets influenced and government policy generally influenced the markets. And that portfolio was a failure. But since then, I've had a couple portfolios, and I still hold some properties. I just always go for whatever is convenient in my life. I'll purchase properties, hold for about 3 years. That's typically my average hold time is 3.5 years. And I primarily have invested in small multifamily properties. So duplexes to quadplexes. I do have some experience in commercial and single family as well.
Okay, very good. So can you kind of walk it back a bit? How you mentioned there were a few hiccups or snags that you had in the industry. Could you explain that a bit?
Yeah, sure. So I'm from the Midwest. Most of my real estate investing has been done in the state of Michigan, but I've also owned property in Indiana and Chicago as well, all around Lake Michigan, essentially. So obviously, property prices tanked 2008, 9, and 10. And I owned a lot of property. And because I thought it was okay, because everyone thought it was okay, I was leveraged to the hilt. I had my properties, I was in at 0% down. So um, when the economy tanked, people lost their jobs. My renters couldn't afford their rent. My properties were worth far less than I paid for them, or rather, I was leveraged into them for. And so, yeah, that's what happened in that scenario. I'm sure that is a typical story among everybody who went through that time period as a real estate professional.
Sure, absolutely. I guess on a slightly different note, but I didn't get a chance to tell you, I've really enjoyed the articles that you share on Facebook. A lot of them have kind of improved my economic knowledge a bit. So when you're talking about the recession and your renters not being able to pay the rent, I can see it kind of tying together with what you share on Facebook to your story now.
I'm sensitive to it now.
Of course. So where did you grow up?
In the middle of Michigan, small, post-industrial wasteland town. Yeah.
Okay. So at 18, you had had your first job in with lumber. Prior to that, did you have family who did real estate, or how did you get into it yourself?
Another typical anecdote. I read Robert Kiyosaki's Rich Dad Poor Dad series, and it was it made me think that I had the wrong impression about personal finance, about my career, and I just so happened to have landed that job like a year later at the lumber yard, and so yeah, that's pretty much what happened. I just felt like, oh, real estate's a great way for me to change my future financially, because I'm not really from a family of means. I was working 2 jobs at the time. I was actually waiting tables in the evenings and weekends, and working at the lumber yard Monday through Friday during the daytime. So I was just working without proper career path, and so reading. I'm not sure if you've read that. I'm sure most real estate professionals have read the Rich Dad Poor Dad series by Robert Kiyosaki, but it basically gave me the illusion that all I had to do was bootstrap, sacrifice, and then I could succeed. To some extent, that narrative's correct, but For a young person like myself at the time, I was 17 when I read it. A year later, really started in earnest in real estate. It was definitely consequential, but it was a good learning experience.
Sure, of course. So when you said that you were captivated by this illusion of what you thought to be true, what, if you could go back and tell 17-year-old Michael something, what do you think you would say?
Um, wow. I mean, obviously, I would warn him of the financial crisis that was about to happen. But practically speaking, for any 17-year-old, I would I would definitely say get more knowledge. Um, Knowledge and experience is more important than confidence. Yeah.
Sure.
I mean, I was just, I don't know, just running on pure confidence, maybe arrogance, and that can get you in trouble in real estate because real estate is a fixed asset. It's not as liquid as you would hope it is when you need it to be. And so once you get into a real estate deal, unless you already have a savings that gives you flexibility, it ties you down to some extent. And so it definitely prevented me from doing anything with my life for about 3 years while I slowly took care of my portfolio at the time. So young people who are thinking of getting into real estate, it's a good idea to learn while earning income. So whether that is work, depends on your skills, whether that's becoming a real estate professional as a salesperson, working in a bank, or working as working for a contractor, doing the actual renovations and things like that. Any skill you can bring to bear while earning income, while learning about the industry, that would be ideal, rather than just jumping in and expecting a good result. You might be lucky. You might be like one of those Bigger Pockets podcast, guests who have the great stories, but likely not. It's a good idea to be somewhat conservative because real estate is an industry where there's basically no barrier to entry. $300 probably, maybe 500, and then you have your real estate license. You're a real estate professional, and so you're competing with a lot of people, and some of them are going to be very shrewd and sharp, and there's just so many people. So it's good to slowly break in, learn as much as you can, especially about location you're at. So what I learned in a small town in Michigan of like a quarter of a million people is not applicable to the Chicago market, not completely applicable. So it's important to learn your neighborhood because again, it's fixed. It's real property. It's not moving. And so the only thing that really matters is what is the market condition? What's the law? What are the laws like there? What are the trends? Is it a rental market? Is it an owner occupant market? There are a lot of details that would be important for someone to really understand before they start, signing documents and becoming an owner of a piece of real estate.
Sure. So I know you mentioned before a bit about knowing the lay of the land, knowing about taxes and different regional things as well. For me, I'm more well versed in the Texas markets. But what could you tell me a bit about what you're seeing in the Midwest?
Well, Chicago is known as a renter's market. A lot of markets are renters markets in the bigger cities because it seems like the mortgage on a property can sometimes the mortgage, the monthly payments, including taxes and other obligations, tend to be the same or higher than rents. And so when you have that sort of unique scenario, people would rather rent. But in the smaller towns, actually the activity is quite good. So in Northwest Indiana, Lake Porter counties, where I actually live, I moved away from Chicago in the last few years. These markets are appreciating, 5%, 10% per annum. So it's pretty impressive. Great for single family property investors or anybody who's looking to purchase a property. I'm not sure what it's going to look like in a few years. I can't really predict the future, but I actually just spoke with a leader of a real estate team in Chicago this afternoon because I was talking with her about potentially buying again in the Bridgeport neighborhood in Chicago, which is one of my favorite neighborhoods. And she said that properties aren't staying on the market very long if they're well priced. and that despite the public health crisis right now, people are still making offers on.
Sure, sure, absolutely. I've always wanted to learn more about the market in the Midwest, considering, we do have a lot of those people from Chicago, from Illinois, the Midwest that
Hmm.
are coming down here. So comparatively speaking, I can only speak for the Texas market, but it's great to hear some insight on what's going on over there.
Yeah, the big difference. I thought about moving to Texas actually, and sometimes people will browse Zillow and look at what I could buy. I haven't looked at Austin. I've mostly looked at DFW. So some of the north eastern suburbs, um, like Plano, for example, the greater Plano area, and you can buy so much more in Texas for the same price, even then compared to Northwest Indiana. If you're in a comparable, safe, good community with good schools, your dollar will stretch so much further, and at least in DFW. Yeah.
Sure. So what's compelling about DFW to you?
It's the metro area is similar in population to that of Chicago. Um, Diversified. The economy is pretty diversified. It's not like Houston. It's more diversified than Houston. I think that bodes well for the stability of the communities. It's growing. It's hard to find a home that's really old in DFW. They're all new. That's interesting. I mean, I'd probably live there if it wasn't so damn hot. It's not. I'm, I don't like that weather. Otherwise, I'd probably be your neighbor. Yeah.
Yeah, fair enough. Fair enough. I guess I'm the opposite. I'm not a big fan of the cold.
Mm, yeah, yeah, and one thing that's also very compelling about Texas in general is the income tax, and so you see a lot of families moving to Texas because of income tax. But of course, um, I've heard that the property taxes are high in Texas, but I've made comparisons on to even Northwest Indiana or Chicago, very similar actually.
Sure,
So.
absolutely. So I guess we've spoken a bit about the markets. So what's I know you mentioned you had talked about when you were younger, you had started out, working with lumber. You kind of cut your teeth on that. But why not commercial? Why not stocks or bonds? Why not Bitcoin? What speaks to you about real estate?
Okay. Real estate is a great way for somebody who is who's got some more time on their hands, who doesn't mind being active in their investment, to leverage their time and to leverage mortgages. Um, if you're buying a corporate security like a stock or a mutual fund, um, you can expect a certain return on your investment, but that's it. That's all you get, and there's no tax advantages. Um, there's really no upside other than hoping that the market is going to appreciate and that particular company is going to perform well over time, for which you have no power or influence over that company. Whereas if I have if I let's say I'm looking at a dividend stock, let's say I'm looking for passive income, because that's one thing that you would get only from a certain class of corporate securities, that is dividend paying securities. So the average dividend on a stock is what, 1.5 to 3%, depending on how risky you want that stock to be. Um, and you also get appreciation on top of that. But if you buy a rental property, not only is it going to be pretty easy in most markets to get a higher return than that, the appreciation might be lower, but also you can use leverage. You can't do that with a stock. So I could spend 100 grand or 50 grand cash to buy a property that is worth 5 times that much, and I can get the cash flow from that investment, which will be much higher than a 3% return. In some markets, at least in the Midwest, if you're crafty, you can easily guarantee a 10 to 20% return on your investment if you leverage. So,
Sure.
whereas with stocks, that's impossible. And Bitcoin, obviously, that's a speculative device, which is totally different. Uh, yeah, it's different
Right.
than investing. Sure.
Fair enough.
Even though I did mess around with Bitcoin a lot when I was in, when it was first around. So
Understood. Yeah, there's just there's a lot going on right now, considering the capital markets, how it's affecting the real estate market, different regional issues that the different regions are having. But there's so much hearsay about in terms of the recession. Is the worst yet to come? Have we seen the worst now? Will it get better? What do you make of the recession right now? How long it could potentially last, and kind of what do you think we will be in for the next few years?
well, I don't really have anything to say about that because I don't have enough knowledge. But all I know is what I'm hearing from people and what I see in people's behavior. In Indiana, now that the lockdown restrictions are more or less lifted, there's a lot more activity here. And so also the interest rates are still very low. I mean, I'm tempted to go out and buy another property because the interest rates are so low. So yeah, some people are a little concerned about the future, but if they were going to buy a house anyway, they might just buy a smaller house for the sort of single family owner occupant type market. I think that people might just be a little bit more conservative. That would be my expectation. Like if I'm looking at the question you asked, what's the market going to look like from an a priori standpoint? I would assume that people are going to be more conservative. They're going to buy a smaller house. They're going to spend less money, but they're still going to buy property. That would be what I would assume would happen. For landlords, I know a lot of people are concerned because people don't want to pay rent, not able to pay rent right now. Fortunately, that I liquidated the majority of the portfolio I had before in 2017, late 2017. Maybe I sold too early, maybe I didn't. But a lot of people, a lot of my peers, they're having evictions that they have to process because people are not paying their rents. So we'll just have to see. We'll have to see what happens if the economy rebounds after this shutdown. Yeah, we'll see.
Sure, absolutely. In terms of you, when you were buying properties prior to 2017, how did you were you paying cash, or how did you find these properties? Did you just kind of stumble into it? What was it, by word of mouth? Oh, so and so has a property, or you were actively targeting certain neighborhoods to buy?
Good questions. Definitely didn't stumble into anything. I don't. I'll say though, this is where the state of Michigan and a few other states are kind of unique. So in finance, there's something called an installment agreement, installment loan, but colloquially it's called land contract. So in the state of Michigan and in some other states, they have a land contract installment loan. That is essentially the seller becomes the bank. And this is actually how I prefer to own my property. So I will, if I purchase the house and I sell it, I like to sell it on installment land contract so that I can get the best of both worlds. I can still kind of own the asset in the event something goes bad, but I don't have any of the management headache. So I don't believe that exists in the state of Texas, but it's a really great instrument, legal instrument that we have here, several states in the Midwest and I believe in other places. So as far as whether or not I paid cash, yes, in some cases I did, especially when I got a good deal. And how I got my deals, you mentioned that I focus on neighborhoods. Yes. So there's a city in Michigan called Kalamazoo. That's one market that I understood very well. And I understand Lake County, Indiana very well, and a few neighborhoods in Chicago where I've done a lot of deals. I would say that I know every street of the markets I invest in. I know every street. I know how many properties are in the neighborhood. I know the average price. If there's like a neighborhood association, I try not to get into like politics. So like there's neighborhood associations. Sometimes they're very political. They have relationships with zoning commissions. I've had bad experience with that. had a really bad experience with that. And so I tend to be a little bit more distant than I used to be, but I know the neighborhoods very well. I know the neighborhood association members. I go to the meetings and I try to be a neutral, friendly person. I help out when there's neighborhood events like, um, neighborhood cleanups, planting flowers at the intersections or whatever. So that's nice. That allows for knowledge and for insight. But generally speaking, I just know the neighborhoods very well. And if I'm not licensed in any given location, I have a very scrappy and hardworking licensed agent to help me. Um, and otherwise, I do a lot of mailing. So there are websites, and it's going to vary depending on your location. Every county uses different services, but you should be able to look up the tax records of every single property in the United States. Some places make you pay for those records. Some places allow you access to it for free, and you can look up who owns the property, at least who's paying the taxes on the property, what that taxpayer's address is, whether it's a person, whether it's a business, whether it's a trust. And so what I would do is, I liked the neighborhood. I would dual purpose mail them. So let's say it's a neighborhood of 5,000 properties, 10,000 properties. Obviously, I'm not going to mail all of them. I'll probably mail a few blocks at a time. Or let's say it's a condominium community or townhouse community. I will mail all of the addresses as a licensed agent and say, hey, look, if you're looking to sell your property, I can represent you. I already have buyers. In many cases, I'm the buyer, or maybe I'm not the buyer. Either way, I win. If the owner would like to sell the property, I can represent them as their real estate agent. In the event that I think it's a great deal, I can buy it myself. I bought a property. Probably the best deal I ever bought was this way. I saw a property. I knew the neighborhood really well. The property looked a little ran down, and I talked to the people who walked out of the house one day, and I found out they had been renting there for many, many years. Um, and it was actually a really great neighborhood. It was in a student neighborhood. But it just so happened that the owner wasn't renting to students, so that means they weren't renting to the typical demographic. They were renting to a family, and they had really let the place run down. So what I did is I did research. Okay, who owns the property? I got his address. I know when he purchased the property. I know what type of instrument he used. He used a warranty deed, which means that he probably got a mortgage on it. If he got a mortgage in that year, I kind of could do a rough estimate as to how much equity he has in the property. And so when I made him an offer, it was exactly $1,000 more than his mortgage was for it. And I knew he kind of wanted to get out of the property because he had bad tenants. Property was in bad shape. Sorry for the long anecdote, but this is how you can really drill down into finding good deals. I bought a property that's now worth probably 100 grand. That's a single family property. The rent for students, in the student housing community would be about $1,000 a month. So 12,000 a year in gross revenue. I bought the property for $15,000 using that method, and I probably had to put another 15 grand into it to make it, livable and comfortable. And that's doing all the work myself, pretty much, me and a few of my associates. Had I hired other people, it probably would have been an additional 15 grand. So I was all in on the property for 30 grand. If I would have hired people, it would have been 45 grand. But the property's worth 100 grand now, and cash flows really well, and it's free and clear. So this is sort of my style of investing. However, I don't rent it. I sold it on a land contract, so I do still earn income from it, but I'm hands off. The taxes are not paid by me. The insurance is not paid by me. Repairs are not done by me because somebody is currently paying off their note. Mhm.
Sure. So these methods that you just described, I mean, has this been more of just trial and error, or a friend or a family member had told you this is a good strategy to use, or you read it in a book?
That's a good question. I don't know. Again, this is why I suggested that if people want to get started in real estate, they should just get started in an area that they're comfortable with. They got the right skill set for, because you'll pick this stuff up. I think I learned about the tax website because I had to pay my taxes. So I learned like, oh wow, I can find information about people, and then I can mail them. I would. And I mean, there's some tips I learned from books or from like interviews or media generally. Like for example, when you're doing mailers, always handwrite the envelope. Always put a real stamp on there because people will open it. If it's printed, if it's a printed mailer, it's going to be perceived as junk mail, even if the person opens it and they still think it's junk mail, but at least they opened it. Whereas if you handwrite the envelope and you put a physical stamp on it, it is more work, and you'd have to probably find someone to do that if you're writing hundreds or thousands of letters. Um, it just your open rate is surely going to be much higher, and I got most of my good deals from either mailing or from my social network.
Okay, understood. So if someone's watching and the first thing they're thinking is, Michael, I don't have the time nor the means to even pay someone to handle all of this. I need to do all my marketing strictly online. How would you suggest, or how do you market yourself online for real estate?
I really don't. Um, Real estate, again, it's such a local industry. Um, if I, but people know me. Like, for example, you mentioned at the top of the conversation that I am, I know other languages. So back in Michigan, there are fewer like, first generation immigrants in some of the cities I was investing in. And so I'm pretty much known in a couple towns as being the guy who knows real estate who also speaks Chinese. And so I will still get calls to this day. I haven't lived in Kalamazoo. I haven't done work there for like 2 years, 2.5 years, and people will still text me, "Hey, I've got this client. Like they don't speak English very well. Can you help me?" And so yeah, I mean, you get known for things when you're in a local area, and as long as you're a dependable, honest, good intentioned, person, if people and you're competent, of course, you're actually bringing something to the table. That's what's important. As far as being online, yeah, I still communicate with people who are doing real estate in all the markets I've been involved in, and I know that if I ever want to, go to any of those places and purchase a property, I know people. Um, but as far as like, yeah, if you don't have time, how do you do it? That's goes back to the question you mentioned before. Um, what's better, investing in corporate securities or investing in real estate? Well, real estate, you leverage money and time and as opposed to corporate securities, you get a pretty much guaranteed rate of return. So what do you want? If you don't have time to invest in real estate, unless you're dealing with very, very good people that you trust who are very competent and know what they're doing, you're probably going to get burned. So you've got to spend the time. You've got to network with people, and you've got to do some deals, whether you are the person signing, to spend money on a property, or whether you are helping in some way, whether you are a real estate agent. You have to actually learn the process and learn what is a good deal in your market. Uh, and you have to be patient too, because when you talk about spending time, um, I have purchased a little over 2 dozen properties in my life, mostly multifamily, smaller multifamily properties. And none of them came quickly. They all came from hard work and from waiting. And so if somebody doesn't have that much time, um, don't expect the deal to come quickly. Just keep your eye open for something. And once you run the numbers on a property, as an investor, once you run the numbers on the property and you think it's plausible, then you need to focus, because the way the deals work, it's just like in any sales process or any negotiation process. You're dealing with a lot of noise, a lot of white noise. You have to look at 20, 30, 50 properties, and you have to go through them quickly. Most of them are not going to be applicable to your style of investment. They're not going to be good deals. There's going to be something about that deal that should prevent you from getting into it. Whereas, if you're looking at enough properties, and per year, let's say 2, 3, 4, 5, 6 dozen properties in a year, like you're physically going to the property, or at least you're carefully examining, um, you know, whatever information you get online or your real estate professional partner can provide for you. And then you're thoughtfully running the numbers on the property to see. And of course, you know that neighborhood, so you know what a 2-bedroom rents for. You know what a 4-bedroom home with a garage rents for. Things like that. Once you have that knowledge, you still have to look at a ton of properties, and then you have to really slow down when it's time to make the deal to make sure you're not missing anything. So it's like you hurry up, you go through everything, spend a lot of time wasting your time looking at properties that aren't good, and then at the end you'll find one property that's very plausible and you'll invest and you'll have to slow down and be very detail oriented. And yeah, so I guess what I'm saying is that real estate investing is not for somebody who is super busy earning income somewhere else. I mean, it's not usually very good unless they have a strong partner. So if you're a super busy person, find people to partner with and be careful who you partner with, both in terms of their ethical standards, their personality, make sure that you can communicate with them. And then moreover, they got to be competent. Don't just find some random person from the bigger pockets forum. Find somebody who has been in the industry for a while, and you can verify their track record.
Sure. Yeah, I know that you've been talking a bit, what you just said about, finding a good team, and, you having that good agent. And then you had mentioned how if you had a few deals, you had your entire team set up, maybe you could have worked a bit faster or something like that. How do you network with these people, or find that good agent, or find that good person to partner with that's competent and that has years of experience?
Oh, that's a good question. I got my license. That helped a lot. I called a lot of people. Again, a lot of it's trial and error. As far as finding people to do the manual labor, I'm going to be honest with you. Outside of major cities, maybe it's different in Texas, but in the Midwest, this was the biggest challenge. And it's part of the reason I liquidated my portfolio was I was unable to overcome that challenge. I couldn't find laborers. I had to be the laborer. I mean, I'm comfortable with it. I'm not above doing the labor, but at some point, as the expression goes, you as an investor, you want to work on your business, not in your business. And I found that I was the one changing the toilets. I was the one patching the drywall. Again, I'm happy to do that, but it's difficult to grow your business if that's what you're doing. And so you definitely want to be in a market where there's enough labor who can actually do the work. Some markets, young people just leave. Or I was in a market that it was a college town. Kalamazoo, Michigan is a college town. When the semester's out, there's nobody in the city hardly, because the city has like 70,000 people. The county has 250,000 people, or maybe more than that. But the universities and colleges in that county, they have like 40,000 students. So you can imagine the vacuum. People leave, and so that caused issues because there just weren't too many young people there to do the work. And when there were young people, they kind of lived more like college students, even if they weren't college students. So I found the people who were able to do the work, the actual construction work, who were reliable. They were all old enough to be my father. There's no young people my age. Excuse me. And the good people who could do the work, they were very busy. They were in high demand. And so that's, again, it's going to vary based on the market you're in. I get the feeling a place like Texas that's more lively, it's fast growing. I imagine there's a lot of people to do the labor. So it's probably completely different. So it's all about just networking, get your license, or go meet an agent who you really click with. And usually agents, if they've been in the business for a while, they're either on a team or they have somebody working under them who are handling certain aspects of the business. That's always a good sign. An agent that's working by themselves, sometimes that's okay, because I never worked with a team because I wasn't really representing buyers and sellers that often. I was doing it for my own steam. Yeah, work with somebody who just has the reputation. You can always tell. You connect with them on social media. How are people communicating with them? Do they actually have people responding to their posts? Things like that. Find somebody who's got a good reputation, and don't waste their time, but see if they can help you find your first deal.
Sure, absolutely. And for you, I know you'd mentioned how you liquidated your properties in 2017. Do you still see real estate being part of your life, or what would your end goal be for you in the future concerning real estate?
Well, given how I was burned when I was really young, I'm quite sensitive to the idea that maybe there might be another real estate bubble. I could be totally wrong, but partially I wanted to liquidate because the prices kept going up and I had a lot of value, had a lot of equity, so I liquidated. Um, will I get back in real estate? Absolutely. And I kind of still am, I'm still partially in the door. Um, I just haven't settled on my location yet. So I think that's part of what's keeping me. Also, I'm focused on my own business. I'm in recruiting and staffing. I run a business, so I'm pretty busy with that, and I would like to use that income to purchase property. But right now, I can't find deals. I think that's one reason why I'm not in real estate. As an investor, I want to make sure I can guarantee a rate of return which is considerably higher than like putting money in the stock market. Otherwise, why wouldn't I just put the money in the stock market? Save my time.
Absolutely.
So I'm waiting. I'm waiting for the market to change.
Understood. Is there anything else you'd like to say that you already haven't?
Not really. Just kind of want to double down on the idea that it's really advantageous if you are starting off in real estate to whether you want to invest or whatnot. It's really advantageous to either get your real estate license. It's so easy. It's like a few $100, and you got to study a little bit. What's hard is becoming a true professional. So get your license or join a construction team, whatever you've got to do to learn as much as you can. Be humble, be careful. Always assume that you're probably missing something. Don't think that you know everything about a topic because you studied it for a while. I still learn things all the time, and just wait for the opportunity. You can always work really hard and kind of force an opportunity to happen, but it's better to just do the day-to-day grind until you can find an opportunity, so that you're never in a situation. Because again, real estate's not that liquid. It's not like a stock where you can just push a button and sell it. And so you want to make sure that you're buying the property with a lot of meat on the bone. I know it's kind of like a cliche adage, but you really do make the money when you purchased. You don't make the money when you sell, meaning like you got to get a good deal because you cannot bet on appreciation.
Absolutely.
Mm-hmm.
All righty.
Okay.
Well, thank you so much, Michael.
Yeah, it's been a pleasure. Nice talking with you again. Glad you're back home in Texas, and keep in touch.
Absolutely. Thanks so much.
Cheers.